Hello everyone, welcome back to my YouTube channel. So in this video we are going to see India's 105 non-current assets held for sale. It's a quick revision video, and please do watch all other revision videos that I've already uploaded from my playlist. Thank you so much, and let's get started. So when do you classify a non-current asset as held for sale? See, there are two conditions that it needs to satisfy. First one is it has to be readily available for sale in its present condition. Second one is sale must be highly probable. Okay, to see if the sale is highly probable, there are 5 conditions that are given to us. We need to see those 5 conditions and check if the sale is highly probable or not. The first condition is appropriate level of management. Appropriate level of management must be committed to the plan. Higher authority must be committed to sell the asset, and then they must be actively looking for a buyer, and then actively marketed that sale price, the sale price of the asset that we are selling, that needs to be reasonable and it should be close to its fair value. Okay, sale transaction must be completed within a period of 1 year, and withdrawal is unlikely. Withdrawal from the plan that not to sell the asset is unlikely. Only then you can classify it as held for sale. Okay, let's go. So first one is loss of control in subsidiary. Okay, whenever you're selling off certain portion from your subsidiary and your value is coming below, your ownership is coming below 50%, then you will lose the control. At that point of time, now all the assets and liabilities of that subsidiary must be classified as held for sale. Okay, non-current assets and held for sale. Okay, so exception to period 1. So in our first condition itself, we have seen that the sale transaction must be completed within a period of 1 year. तो उसके लिए एक exception है, ठीक है. तो even if it goes beyond one year, you can still classify it as held for sale when the events and circumstances are beyond the control of the entity. In that case, even if the sale is not happening within 1 year, you can still classify it as held for sale. Okay, but you should be committed to sell that asset. Third point is assets acquired exclusively with a view to subsequent disposal. So this is for new asset. Okay, now let's understand. On 1/4/2023 you have purchased the asset. Okay, now after purchasing the asset, you have made some kind of improvements to it. Okay, and you're sure that improvements would be done within a period of 3 months. Okay, so and also you purchased it only to for the subsequent sale. You purchased it only for resale purpose, and that resale will happen within a period of 1 year. That is this, within a period of 1 year you're going to sell it, but that improvements that you're making, that should be done within a period of 3 months. If it is done within a period of 3 months, you can classify it as held for sale on 1/4 itself. Okay, now I'll go back to the basic condition. See here, the basic condition is that sale transaction is expected to be done within a period of 1 year, and it has to be immediately available for sale. In the present condition, it should be immediately available for sale. That is a basic condition. But यहाँ पे क्या हो रहा है, we have purchased it on 1/4, okay, and making improvements to it. So ideally it is ready for sale here after 3 months. Okay, it has to be classified here. Since it is a new asset, they have given an exception saying if you are sure that improvements would be done within a period of 3 months, you can classify it here itself on 1/4. I hope this is clear. But sale should happen within a period of 1 year from the date of purchase. Right? Clear. Criteria met after the reporting period. Held for sale ka criteria, if it has met after the reporting period, that is after 31st March. So here the standard says is that you cannot change the financial statements. That since it is after the reporting period, you can disclose it in the current year financial statements. Okay, you can just disclose that. In the next year, you will classify it as held for sale. Clear? Now comes the most important one, measurement. How do you measure non-current asset held for sale? Okay, so lower of carrying amount of fair valueless cost to sell is what it says. This is first. Let's take an example of building. Okay, building ideally it would be measured as per Ind AS 16. उसके ऊपर depreciation भी लगाते, right? So there is some kind of a carrying amount in your books. Now I decided to sell the building. When I decided to sell the building, it will be classified as non-current asset held for sale. Ind AS 105 is applicable. Ind AS 16 won't be applicable from that date. Okay, from the date of classification. So on that day, what is the carrying amount in the books and what is its fair valueless cost to sell? You will see, compare those two, take the lower amount into your books. Clear? Perfect. So respect to Ind AS लगता है, that is what I told. Ind AS 16 लगता है. See if I've classified it on 1st October. Okay, from April to October, no, Ind AS 16 will be applicable. I will apply depreciation also, and what all things are required as per Ind AS 16. I will apply all those things and see what is my carrying amount on 1st October. On 1st October, I'll compare these two amounts. I'll take the lower amount. Clear now? Perfect. See, now here in our example, no, building was already there in our books. Okay, building was already there in our books. What if I purchased a new asset? There is no carrying amount for a new asset, so you will take cost and fair market, fair value less cost to sell, and take the lower amount. Clear now? And then asset acquired out of business combination. See, in business combination chapter we have already studied ki whenever there is any acquisition, you will take the fair values of all the assets and liabilities, right? So there is no cost, there is no carrying amount, so only fair value less cost to sell you will take and recognize that in your books. Clear? Perfect. So once it is classified as a non-current asset held for sale, Ind AS 16 will stop, right? When Ind AS 16 stops, you will also stop calculating depreciation, right? But impairment will apply to Ind AS 105 for all the assets. Every year impairment is applicable. There is something called disposal group. Okay, so if you see, disposal group is nothing but here we have studied only building. In our example, we are selling only building, so that has become non-current asset held for sale. Now there's some kind of a group of assets, we are treating them as a group and selling off the entire group. ठीक है, वो group में ना you will have building, inventory, goodwill, liabilities also, loans, payables. Okay, all these assets and liabilities collectively are called as a group, and I am selling off all those things at a time. Okay, so even as in the disposal group also, no, you will see the fair value of the group as a whole. What is its value, carrying value as per books, and you will see what is its fair value. If the fair value is less than its carrying amount, then impairment is applicable. Clear? No, same like cash generating unit, that sum we have done in impairment, no, exactly like that this impairment is allocated to these assets: building, inventory, goodwill, loan, payables. For inventory, impairment is not applicable. Remember, first you will apply the entire amount to goodwill and then balance to other assets. Okay, so for inventory, impairment is not applicable. Perfect. Changes to plan of sale. See, suppose on 1/4 I've decided to sell the asset, sell building. On 1st October I'm deciding ki no, I won't sell the asset. Now you need to reclassify that. So now Ind AS 16 is applicable. So Ind AS 16 will be applicable from 1/4, as if Ind AS 105 अप्लाई हुआ ही नहीं. तो 1/4 से लेकर मैं डिप्रिसिएशन कैलकुलेट करूँगा, और 1st अक्टूबर या 31st मार्च को जो भी मेरा कैरिंग अमाउंट है, आई विल टेक दैट कैरिंग अमाउंट. Okay, after making adjustments to depreciation, amortization and revaluation amount, and I'll also see what is its recoverable amount in the market. Okay, and then lower of these two I will recognize in the books of accounts. I hope this is clear, and any adjustments will be recognized in the P&L account. Perfect. Discontinued operations. See, discontinued operations means you're selling off a separate, like, major line of business. Okay, earlier, no, I used to manufacture goods, sell them and also transport them. Right now I'm selling off the entire transportation business. I'm only dealing with my goods, so that is a major line of business. Okay, the only difference between this disposal group, here you have assets and liabilities clubbed together, and this discontinued operations, no, major line of business. Remember, if it is a major line of business, then discontinued operations. Perfect. Geographical area, like I'm selling one particular area, like entire Mumbai area, my market, I'm selling it off, or I'm not going to sell there. Okay, that is geographical area of operations. If any subsidiary is acquired exclusively with a view to sell, entire subsidiary you are selling it off. So, okay, that is discontinued operations. So in financial statements, now you have to show them separately in your P&L account. What is continued operations, uska incomes, uska expenses, what is the profit from there, and what is the discontinued operations ka incomes and losses. Okay, so that has to be presented separately, is what standard says. I hope this was helpful, and we have completed this within 10 minutes. Please do like if you if this video was helpful, please do subscribe, share, and share it with your friends. Thank you so much, guys. See you all in another video.